Good morning and welcome to the March 27th edition of the Gold Goats and Guns Market Report. My name is Tom Luongo. You know, as always, we have just a lot to talk about. All right, so we're coming up on the end of the month, which will be Friday. So Friday is also the last trading day of the quarter. So I've got monthly charts for you today, or quarterly charts for some things, because, well, we're at that point now. This will be in anticipation of those closes, which will happen on Friday. So, you know, there's still a little bit of salting to taste to deal with at this point. But I thought it instructive now to kind of look at where we are and see what's going on in all of the major markets. So let's get right to it today. So as I'm recording this now, British Parliament is exercising its suicide pact with itself. Its moment of harikiri, as it goes through no less than, I think, 11 different indicative votes as to what form of Brexit they want to see. So this will be fun to watch to see how many of them pass. So imagine if they come up with 6 different ideas that all pass the House. Then what? What if they get none? The Letwin Amendment that went through the other day. I don't know, for those of you who understand what's going on, and I tried to explain this stuff as best as possible. I did so last night on Halsey and Dustin's live stream. If you can, wade through my my gutter mouth, because when I'm on that show, I just can't help myself. You can learn a lot from it. But also yesterday, Alex and Alex over at the Duran did a great rundown of what's happening. And to make a finer point on it, there's no guarantee that French President Emmanuel Macron, won't just torpedo the whole thing anyway as a political fork in the eye to both Merkel and the Brits, both of whom he hates. So we are in a very, very interesting situation right now. But Corbyn just tabled an amendment for a very soft Brexit. The term is basically Norway Plus. It's basically the same deal that Norway has, with some tinkering on the sides. And that is, effectively a customs union, single market, and pretty much no Brexit. That's what Labour has maneuvered him into, and he's done nothing. And he did nothing this morning. I watched a bunch of British Parliament this morning, and I watched him virtue signal terribly, while he just screams at Theresa May. At one point, just told him, like, did you actually listen to my answer, or were you just shutting up long enough so that you can make your next point? Which was a really choice moment. I have to give Theresa May a lot of credit for a woman who's absolutely under every, who's being scapegoated in every way for the failure of this, and with good reason. She is in no way blameless in this, but I'll give her some credit for sticking to her guns and holding fast as hard as she can to some form of control over this, while her party stabs her in the back, while the Remainers in her party stab her in the back. The best news of this week I heard is that on March 29th, the local Tory party is going to, they may table a motion to recall arch Remainer Tory Dominic Grieve from his very, very safe seat, which he won with, I think, a 78-22 majority in 2017. They want to recall him and remove him from Parliament and open him up to by-elections. If that happens on the 29th, on Friday, that will be very telling, because that will be a chilling effect on everybody in the room as to what's happening here and how much of a backlash they face at the ballot box. I think that would be the best thing to do for them to do at this point. Grieve has been the face of the Tory Remainers, and it's time for him to be removed, frankly. And it would send a very strong signal by Leavers that they're done with the EU. Because especially, I mean, when people like Corbyn, and these are people who are committed Marxists, and they're committed to the transnational superstate, they're committed to this kind of anti-corporatist path, even though the EU has now become, the ultimate protectionist state for transnational corporations, much more so than the United States. You look no farther than yesterday's them passing the copyright directive, which include Articles 11 and 13 on trying to control speech on the internet. That when when all is said and done, it's pretty sad that this is where we are. And for the people in the audience, the new people in the audience who do not understand what I mean when I talk about Marxism and socialism and everything else, I'm going to do a series of videos on this to just explain in every way what it is I'm talking about, so I don't have to go over this again and again and again. So there's a reason, and I do it on the live streams all the time, and you guys know this, but I'm running into this now more and more as my reputation starts to, as my presence on the internet starts to rise, and I use very inflammatory language for a particular reason, which gets huge effect. So, but this needs to be dealt with. It needs to be dealt with in a kind of systematic way. So I really need to put something out that makes that I can just kind of constantly refer back to. So when somebody comes on and says, "Tom, you don't know what you're talking about with socialism," and I'll go watch this. I know exactly what I'm talking about. And I can't believe I haven't done that to this point. I'm 2.5 years into this, and I still haven't done it. Because there's just so much other stuff to do, right? So now let's shift from Brexit. Brexit is what it is. It's gonna have huge effects on everything. We've been over it 1,000 times. No one has any idea what's going to happen next, and that's the best way to look at this. And when we look at the charts as we come to the end of the quarter, it's pretty obvious that no one has any idea what's coming next. Okay, so let's talk about Trump and the Golan Heights and Israel and all of that. There was yesterday I had an article on Zero Hedge, and in the comment threads, and every once in a while I'll read the comment threads on a particular article to find out what's going on. And I get a lot of flack in the Zero Hedge comments because I'm not a huge, staunch, enemy of Israel, right? I refuse to see that it's all just the Jews, right? Now, it's just nonsense. Of course, it's not, which is of course nonsense. But it was interesting that one guy yesterday said, Caitlin Johnson and myself, have turned themselves into, friggin' irrelevant quizzlings of, and all of that. This typical kind of alt-right, and virulently anti-Semitic and anti-Israel stuff. And one guy just came back and said, look, with respect to that, those two have carved out a niche to get paid and get a living writing mildly critical stuff about Israel in the West. It's no mean feat. And I'm like, thank you. Because it's hard to see that in the grand scheme of things. You don't see that a lot. And I know this is kind of off the market report stuff, but it's important to understand, just how hard it is to take a balanced view on issues like this. So Trump's recognition of the Golan Heights, I don't know that this was always in his plan, and I really do think that it's a mix of things. He's got soaring political capital because of the end of Russiagate and the Mueller investigation. Netanyahu was trying to get reelected. There was a rocket attack from Gaza. I don't know if you read Moon of Alabama's argument about the Gaza rocket attack. He rules out the idea of a false flag that was actually in the Palestinians' best interest to do so, because it puts Netanyahu into a difficult situation politically, depending on how he responds. Trump pushing for the Golan Heights, I think it's like everything else. Trump is convinced that creating as much chaos as possible and breaking through and just doing things that have been verboten for years is the right way to break open and show the world's hypocrisy to itself. I really do think that's why he does things like this, and he doesn't think any farther than that. He also knows that at this point in time, because the United States won't leave, and John Bolton has been adamant that he doesn't leave for these reasons, that he now has an opportunity to make this push now, because he's not going to be able to make this push a year from now or a year and a half from now, especially if Netanyahu is not reelected. If he doesn't make this push now, the window will close to do so, because the United States will no longer have any presence in Syria or Iraq or even Afghanistan. And he needs to be able to do that before the Syrian army is completely resupplied, at which point there could be a war that would then break out between Syria, Hezbollah, and Iran versus Israel, and Israel would lose, short of nuking everybody. And so that's why I think this is going on now. I'm not taking a position as to whether I agree with it or not. I don't agree with it, but it's irrelevant. My opinion on it is irrelevant. I think that's why this is happening. So we'll see what the downstream effects of this are. I know Lee Stranahan is all over the Genie Energy side of this. I think it's bigger than that. I'm not saying that Genie Energy isn't important. It is, and discussed this on Fault Lines yesterday, that it would be great if Tulsi Gabbard would immediately table a bill in the House to expose this, and that would be really good, because there's people on both sides of the political divide here in the United States that are on the board of GE Energy, both Republicans and Democrats. It's an obvious uniparty push here. But regardless, this is what this is about. So it's very political, obviously. And I think that de facto the de facto reality is that Syria is not getting the Golan Heights back anytime soon until the Israeli state collapses. And I don't know if that's going to happen or not, but depends on how you view this in the long run. Okay, the ECB. Let's get to this real quick. It just hit Zero Hedge that the ECB has now opened up their discount rate to a variety of tiers, right? So now currently their discount rate is, I think, -4%. They're freeing banks up in various countries to be exempt from that and allow them to not pay 0.4% every month in order to try and boost bank profits and whatnot, in order to try and improve the banking sector. First, all that really did this morning was allow people who were to burn shorts and give people who have inside information a whole bunch of money going along English European banks. But as Zero Hedge pointed out, it doesn't fix the underlying problem. And Japan and Denmark and other places have tried this before, and it doesn't work. So it's just further evidence that the ECB does not have control of the situation. They are desperate to try and get some kind of reflation happening. They can't. Deflation is occurring everywhere, and all they're going to be able to do now, the same thing with the Fed, is they're going to have to open the floodgates, and I don't think that it's going to be enough. And if Parliament, again, getting back to Brexit, if Parliament is unable to come up with a coherent plan, or Macron just says no and vetoes any deal that's put forth, which is very, very possible, then April 12th, the Brits leave on WTO terms, and the whole thing collapses. So we got to watch very carefully to see what happens. And then don't forget, take as much salt as all this stuff to taste all you want, but markets have been very choppy. We're going to show that in a minute. And Martin Armstrong's timing models are all saying May. European elections, whether the Brits crash out of the EU, yada yada yada. I know that phrase is not fair, but let's just move on. So, and then speaking of the last thing, which is to say, let's look at gold. So really interesting looking at gold. I don't have a quarterly chart for gold. I don't know why I didn't put the quarterly chart up, but here's the monthly chart. We'll put the quarterly closing chart up on Sunday. Sorry. So we have our strong resistance band right around the post-Brexit high from 2016. We've gone after that high 1, 2, 3, 4, 5, 6, 7, 8 times, 9 times, and it's failed every time. Gold is not going to break out until Brexit is resolved one way or the other. But this is a very interesting thing. So we had this huge, nice, beautiful 4-month rally in gold. And then, as always, that reaches its peak. The probabilities were very high that we would get a loss here. And now those numbers aren't right. Oh yeah, they are. Sorry. And now we've gotten a sharp correction and then a very strong bar here for March. This is a very strong bar for March. After a $75 collapse in the price of gold that threatened a massive reversal of this uptrend, we have this massive long tail and a 2-to-1, 2.5-to-1 setup for breaking the previous high and then pushing towards the post-Brexit high next month. Because remember, difference between closes every month, $56. So we're absolutely, if we close above 1320, 1330 in that range between 1320 and 1330 this month, it's actually putting us in not only in the range to break this previous high, this March high, but also challenge the February high. And that's putting us into a mode that Q2 could open up with a blast through the strong resistance. And again, it's all kind of shaping up that's what the market is setting up for. And the euro price of gold continues to break out to the upside. So we know where money is flowing. So speaking of the euro, Oh, we're going to talk about the 10-year Treasury. Sorry. I do know, I think I have. Yeah, there's the euro. So let's go. Speaking of the euro, I'll go back to the 10-year in a minute. So here's the quarterly chart for the euro. Now, we've been talking about this for a while now. Remember that a year ago, and I know I talked about this, a year ago, I was unconvinced that this move to $1.25 in the euro was sustainable. I have proven to be correct. It wasn't hard to figure out. At some point, this 5-month or this 5-quarter uptrend had to reverse itself. It's now a year-long downtrend, and it did so in stunning fashion in a 1-bar quarterly reversal here, and nothing has changed. When we look at, I've showed you the short-term charts and the weekly charts and the monthly charts, and they all bear the same thing in the quarterly chart, which is that lower highs and lower lows. Every one of these lows is lower, and every one of these highs is lower. This is a bad sign. This is a very bearish sign, and there's no sign of strength here whatsoever. Now, it is tailing off, and maybe, but this again, is this tailing off because we've got a surfeit of sellers here, or that sellers have dried up, or is it that people just really don't know what to do? 2-to-1 pot odds to break the previous those numbers are not correct. I think they're backwards. Yeah, I'm almost convinced they're backwards. The 2-to-1 pot odds that we break the previous low versus the previous high, those numbers are backwards. And we'll see what happens. But it is also a 4-quarter downtrend, so probabilities are rising that there's going to be a quarterly move up. And if it is, it's going to be a very high probability that will break to the upside. If that happens, we would break to the upside. There would be some kind of reversal bar. Probable, because there's not going to be an inside bar here. We're at very, very low volatility. So we'll see what happens. But I think the market at this point does not know what to do. They're just waiting on Brexit. They're waiting on the European parliamentary elections, and rightly so. All right, let's talk about. But given that, let's talk about now. We talked earlier about the capitulation of the ECB, and now let's look at the complete and utter capitulation of the U.S. Treasury markets, or of the Federal Reserve. You know, the market hated the last rate hike. I think of that point, there is no doubt. But to look to put it in perspective, I didn't really ever put this chart together like this and look at it from a quarterly perspective. We've been looking at it from, weekly, and we're looking at the yield curve and all this stuff. Let's just look at this unbelievable bar. This is a bearish engulfing bar. Broke previous high, broke previous low, and closed at the low. This is a signal that this is not going to end. And we were right about talking about this at 3.25%. I remember talking with our subscribers on Slack about this, that was the trade. That's been the trade. It's been a brilliant trade at this point. And what's interesting is how well that, given this unbelievable move, historic move, that rivals this move into the U.S. Treasury market, into the 10-year, which is now, by the way, trading below the Fed's target rate of 2.4%, with a massively inverted yield curve. All discussion about growth and what to do going forward is irrelevant. We're in for a global recession later this year. That's what the markets are telling us. It's what the yield curve is telling us. And the price of oil hasn't caught up yet. And we're looking at just a massive move into safe haven assets, gold, U.S. Treasury bonds, and U.S. stocks. Everybody keeps wanting to talk about a bubble in the stock market. That's not a bubble that you're looking at there. That's the quarterly chart of the Dow Jones Industrial. That's not a bubble. A bubble was Bitcoin. That's not a bubble. What that is a market that is setting up for a massive move to the upside once we get clarity as to what's going to happen here. Because if the euro collapses here back down towards $1.03 and possibly even down below parity in any kind of crisis, the Dow is going to shoot to the moon. And that's what this bar is telling you. We've sat here, look, we have a bearish engulfing bar, and then we follow that up by a massive, and these are Six Sigma moves, people. or 3 sigma moves. These are huge, huge moves. And these numbers, right? These numbers have been blown out based, the median numbers here, that this is the median of the data that I have going back about 40 quarters or so, 45 quarters or so. This is now, there's enough of these huge volatility moves that they've doubled this number, this volatility number of the range, and they've doubled this. So it's to understand what's happening here is you can't trade this day to day, and this kind of extreme choppiness was predictable if you understood, if we as we've played out all of this political unrest, because the markets don't know what to do. But European assets, I mean, we have everything lining up. We've said this before: gold, U.S. Treasuries, the Dow, and the dollar are all lining up for a bull market, but not based on growth, based on safe haven trades in the mother of all crises. Okay. So if these numbers hold for next month, there's better than a coin flip's chance of breaking last quarter's high in Q2, and virtually no chance of breaking the previous low based on previous data. The fact that this number is as high as it is, given where we are, that's stunning. Given the breadth of the move in Q4, mostly December. And then look at what we got here. One other thing to note, we've got an inside bar here in Q1 on the Dow. We've also got an inside bar for March. So also really interesting. So in the short term, the rally's kind of played itself out, but on the monthly level, I don't have the chart for you, but also have we run out of steam, or are we just confused as to where to go next? It's a good question. We'll find out. We'll get more confirmation of this after Friday's close and the quarterly close, and we see what the Brits do on Friday, and then moving forward. So it's going to be very interesting. Tomorrow should be a fascinating day in the markets. I wouldn't be in there with all the money in the world, long or short, or both, frankly, because I don't even think I could handle being nimble enough to exit one leg of a position and get into another. I just don't think I can do it. I know I can't do it. That's why I don't trade anymore. All right. So with that said, I'm going to go back to watching British Parliament, finish up an article, and watch traffic splash by. You guys have a great day. We'll talk soon. We'll talk Sunday. Keep your stick on the ice.